Oh, aloha, everyone. Joshua Hayes at BigWaveTrading.com. Happy Memorial Day weekend. Hope everyone is enjoying. Remember, stay safe, social distance, wear a mask whenever you go out in public. Protect those that want to be protected. Remember, this isn't for you, it's for others. So just keep that in mind. Anyways, getting straight to the market. This uptrend continues to be extremely resilient, but once again, that volume profile. Look at the volume on the way down, V shape up. Look at the volume on the way back up, and now look at what the 50 volume moving at day volume moving average is doing, declining. Now, my hope here is that we can chop around, pull back, continue with the low volume, then start to move higher with above average volume. But we'll see. We'll see. I keep an open mind. I think that we can continue to grind higher, but I want to remind everybody the SPY is still below the 200-day simple moving average. So it's the onus is still on the bulls to prove that this market wants to move higher. The Dow Jones Industrial Average is still below its 200. IWM below its 200. Look at the financials. Ugly. The Dow Jones Transportation Average, which you always want to see lead, look at how bad it's lagging. And then, of course, you have the NASDAQ. And there's a lot of lines on here, but we'll go over that later. And I want to make mention, the last time I seen the NASDAQ or the NASDAQ 100 outperform the market like this was back in 1999 when I was a brand new trader. And back then it was way different because the individual stock patterns looked a lot better than today. I had better setups. That being said, there's been plenty of leaders and winners during this V move off the bottom. And while my bread and butter methodology hasn't been receiving a whole lot of signals during this low volume melt up higher, focusing on the leading big cap stocks, the ones that are beating their earnings on the top and bottom line, the ones that are raising estimates, the ones whose accumulation distribution lines were hitting new highs during the pullback with the relative strength of their industry group stronger relative to the market. They've done well. I've kind of botched that methodology up. I'm looking to work on it. That's why you see all these moving averages here. These are basically the Fibonacci moving average lines. 8, but I use the 9. This is the 21. This is the 34. And this right here is the 100, 50, and 200, which is separate. But the 9, 21, 34, back testing off the 21 while it's in a TTM squeeze, which the NASDAQ, by the way, is not. That's why there's all these green dots. It's a methodology I'm going to start employing moving forward because it's quite obvious that with the high short flow leadership, if the market's going to melt up, you got to stick with the leaders. My bread and butter methodology just isn't finding stocks right now. And that's because we continue to work with the market that we're given, and the market that we're being given right now has everything kind of out of whack. The volume profile to price is out of whack, i.e. we're selling off on heavier volume. We rally on lower volume. You'll notice that even in the NASDAQ here on the way up on the daily, the tall bars are red. If you look at the IWM, you'll notice the tall bar that sticks out here is red. The DIA, your tall bar is red here. And then the SPY also, you got a red bar here. Got some good green bars here, but after those initial bars, red. So just keep that in mind moving forward. On a daily time frame, looking at the time segment volume, I look at my indicators to see how strong the current trend is. We're waning on the PPO. You can see the histogram is falling. The TSV, the lead line, is below the signal line on the SPY. The DIA is the exact same situation. You can see that in both of those indicators. TSV also kind of weakening. It's not bad, but it is weakening a little bit. PPO still looks good overall, but as you can see, it wasn't as strong as it was off that initial bounce. But it is in a squeeze on the IWM, and it's hard to see here, but you can see a little bit of blue. We are still, the TTM trend momentum is moving higher. So history indicates that we should break up out of that squeeze. We'll see if that happens. DIA, SPY is also in a squeeze, medium to loose squeeze. And then the QQQ, of course, no squeeze, just continues to move. But what I want to really say here is that if you decide to chase the market here, V-shaped rallies have a tendency to always end the same way. You V-ramp up, sell off hard. V-ramp up, sell up. V-ramp up, eventually, big sell-off. V-ramp up, sell off. V-ramp up, sell off. And then as you can see, we did that constantly as we grinded higher. And yes, we can grind higher, but with the V-ramps having that tendency to sell off hard, it's always best to buy the market on a pullback. So that's what all these lines are here for. You can see a Fibonacci retracement from the lows to the highs. I also attached an anchor VWAP to the low. And what I like to look is for a cluster of support areas. And on here, the Fibonacci 38.2 retracement level is kind of lined up with this anchored VWAP, the 50-day moving average, and the 200-day moving average on the NASDAQ. So this is a strong area right around the 204 area that if the market can pull back to there, I would love to get long. However, with as strong as this market is right now, the best place to enter, I'm going to go ahead and erase everything now, those lines, is the 21 EMA. But man, they don't give you, it just doesn't allow you really to enter. The NASDAQ QQQ didn't even touch its 21 EMA, which is once it comes out of a squeeze where that little black dot is where I like to get long. Hasn't even really touched the 21 EMA. If we look at the SPY, it's hard to see, but you can see it only touched it. It didn't even touch it here. It's only touched it a couple of times. And once again, you had one day here to get long the SPY, and I don't see how you could have done that unless you had a limit order there. And then you had a 3-day decision here. And normally what I would do here is once it touches the 21 EMA, put a good to cancel buy stop here. As you can see, we gapped up above it. So it's been a tough market to game if you're a trend follower, swing trader. And that's why we continue to recommend long-term 401k investing. Each market pullback of 10 to 20%, you start to put a little bit more into your 401k, and or it's a day traders only market. And with that being said, after hours, we were only focused on 2 stocks after hours, Gene and EVFM. We alerted the Gene, moved 5% before having to break even, small cut loss, and EVFM, the alert was given in the chat room before a 30% move in 2 hours. So there's still opportunity to profit out there and employ different methodologies, but my bread and butter continues to be weak. And like I said, those indicators really, are the guide. So I showed you the TSV, what it looks like on the daily. Then I'm also going to show you on the monthly, which is the best time frame. I'm going to repeat and remind everybody, when the TSV is bullish and above the signal line, good things happen on a monthly basis. When it's bearish, and I'm looking at the wrong one, sorry, because it's hard to see over here. So I'm just going to use the PPO for this example since it's better to see visually. Whenever it's trending lower, bad things happen. Trending higher, good things happen. TSV, PPO, they basically line up. When they're lined up, it's even better. And then as you can see, whenever you get the tightest squeeze in the market, that's when really good things happen. You can see that happen on the SPY and the QQQ back in 2016. Right now, we don't have anything lined up on a monthly time frame. The time segment volume remains bearish, even on the QQQ. The IWM, which is a little bit easier to see on telechart here, you can see how it's below the signal line, the SPY, and the DIA. So that's negative on all areas. PPO, if you look at the bottom indicator level, you can see the lead lines below the signal line on the DIA, the IWM, the SPY, and the QQQ has at least crossed. So that is a positive. It's the only one that has a positive monthly PPO, which is why the QQQ should be the one to focus on if you want to get long stocks if we don't have a rollover and collapse, because it's the one that's holding up the best. Now, the good news on the intermediate time frame, on the weekly, while the SPY is negative, the QQQ, as you can see here, has turned positive, and there's some separation between the lead line and signal line. On top of that, the DIA, that has also slightly turned positive. It's just starting. And then the IWM has also turned positive. No separation yet. But that's a good sign. That's the weekly. If I can get the daily then to line up, which it's close on a lot of these, with the weekly, I can increase size when I do get my signals. I still need to get my signals, but if I do get them, I can now increase size. And when the monthly turns, I can really push size. And then if I get one of my beautiful setups, which members know, ARWR last year, WTRG last year, when it's clear and obvious, you can really push and put 20%. And if you're really, really bold, more than 20% of your account capital into one of these signals. But for now, steady, measured approach due to the overbought market. So that's just going to go and wrap it up there with the overall market. And now I want to go ahead and review our top current holdings that are making new post-signal closing highs since we gave the alert and got long at bigwavetrading.com. All right, so I'm going to go from lowest percent winner to biggest percent winner and just remind everybody, They're not all winners. In fact, there's been more losers than winners since this actual March low has happened. But what do we do anytime we're in a stock and it doesn't work? Hard rule number one at bigwavetrading.com is cut your losses. Hard rule number two is don't chase, don't FOMO. Hard rule number three, see rule number one. Hard rule number four, see rule number one. Hard rule number five, see rule number one. So we always cut our losses. So if you're like, oh, thanks for just showing me your winners, how about your losers? Well, we have losers, but we always sell them quickly. We're immediately getting out of the stock if it's not working. So our losers should never, ever impact us unless it's a death by 1,000 paper cuts, which, by the way, does happen. It's happening to me from the 2019 highs until I can get a great signal. So it does happen. But still, I'd rather have a death by 1,000 paper cuts than have one stock completely destroy my entire portfolio. So with that being said, AMSWA gave us a long signal here. What you see is a hammer candle off the recent price support in an overall steady uptrend. Pocket pivot point signal with the heavier above average volume and a surging green bop to near max green level. We get long. It comes through on this day. I added it a day late. My apologies. That's why the white arrow is right there. And since getting long, AMSWA is up almost 9% in just about a little over a week. I have 50% of my stops here. Then I have 25% here and the final 25% there. But you could also do 50 here, a third, and a third here on AMSWA. In an era of no commissions, if you use E-Trade, E-Trade Pro, Ameritrade, Thinkorswim, or Charles Schwab, Schwab Active Trader, whatever it's called. I don't have that. It's one of the few brokers I don't have. You can take these trades with no commission costs, and you can even set up your stop losses at break even. And yes, you'll probably have more losers than winners, but your losers would always be for $0. And then you can catch on to something like an AMSWA and or maybe a TW. TW was a long position back here. We've gone over this one before. Engulfing hammer candle over candle. Heavier or above average volume with the pocket pivot point signal. Surging green bop. It gapped up initially. No fill because there's a certain limit price. We have a 1% offset from the good to cancel stop. That's always 1 cent above the high of the day. Did not fill this day. I normally don't take these on the way back down. It might be change things up moving forward. But once it comes back up and through, I'm now long TW. And as you can see, it's been working out since the signal. TW is up 18%. I have 25%. I'm going to be placing 25% of my stops below Friday's low day. I'll have 25% there for 50 there. And then I'm going to stagger the rest of the position right through here. Remember, in an era of low commissions, this shouldn't be a problem. Now, if you can't manage that many, maybe you have 50% here, maybe a third here, and then a third here. Everybody's risk tolerance is different. Everybody's, I guess, greed level is different. So it just depends on how you feel and how you want to trade these. I'm just trying to get you into the best winning stocks that have explosive potential when they work out. So that's TW. The next one is CYCC. Once again, what sucks about this uptrend is that right now I can't differentiate the signals I want to push size into or the signals that are going to fail. So I have to treat every signal as the same right now until I get that clear. Which is normally candle over candle, biggest volume in the past 9 months, or the biggest ever, huge surge. Pocket pivot point signal, max green bop, a lot of green on the chart. Just want to give you an example of what one would look like off the lows. CLPR. This isn't even a good one. This is not something. Here's a better one. Let's show you WTRG from last year. This is what it would look like. So look at what the volume and BOP does to the chart. Look at what the volume does. It truncates everything. It's off the support lows, and you can see how well it works. So that's what I'm looking for. And right now, I can't differentiate between what's going to work and what's not, so everything gets treated the same. But bottom line, CYCC was a long signal here, candle over candle, heavier above average volume, increasing green BOP. And it took it a while to go, but now it's working. Since the signal date, CYCC is now up 28%. And I'm just staggering stops along the way. Now, normally I would have limits out there, but Interactive Brokers has been giving me so many problems with holding my stops and limits as conditional orders that I just don't do it anymore. So right now I'm just trailing stops. And that means I got a lot for this one. CYCC, I got to stop here, 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 here. I think that's where my final stop is. So 1, 2, 3, 4 stops on CYCC. And if it keeps just melting up, I'll just keep trailing a stop 1 cent below each low a day. And those are the minor winners. Now, two bigger winners. Once again, wish I could differentiate. GHSI came before the sell-off. So you can see here, candle over candle. You can see the heavier above average volume, that pocket pivot point signal, the max green bop. There's a lot of green bop in this chart. Listen, once again, I didn't know GHSI was going to be the winner. It's under 50 cents. I don't really like these stocks, but it sure did work. But GHSI, bam, up 77% since the signal date. That's in 3 months. I'm going to have a stop here, but my final stop is right here now. After this pullback here, and after this move back above the 50-day moving average, my final stop is right here. It held, so now my final stop is right here. If there was green bop in the entire uptrend, I would work a stop all the way back here, and I would just have partial levels all the way down. But since it's not, there is not. And then, of course, the best one, which brings me back to my point, I wish I could differentiate and be able to tell that this is the one that was going to be explosive. But Mark gives a signal here. You got a hammer candle of strong recent price support. What I want you to notice in this chart is even after on its way down, I should say, look at all of the tails, the wicks, the reversals in this chart. Look at all the open bodies where we open low, close higher. So you see all that in the chart. Still, that being said, even with all this volume cluster, this good price action in this bop, I don't know that Mark is going to do what Mark actually does. So Mark triggers and fills. The white arrow is actually late. The white arrow should be right here. I forgot to add it to the system, so this is when Mark triggered. But since Mark was a long signal, look at this, guys. 465% gain in a little over a month. That's what used to happen all the time before 2008 and now happens rarely post-2008 where you get a 465% move in 1 month. But there just proves that it can happen. Now, I recommend if you're still long, be taking some profits up here. But at the very least, you got to start trailing stops here, 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 here. Yes, I would work all the way down to here with stops because even if you have a stop here, you're going to leave with profits because remember, the signal was here. So if this thing would pull all the way back to 47 and trigger that final stop, you would still leave with profits. But with the stock now up 450% in a month, you need to start taking profits. And just to show you, this does happen before. IBIO was a recent ad signal, by the way, but whenever it was a long signal back here, as you can see with the white arrow, I'm still tracking it. It was a long signal. Where was that at? Right here. Where was that long? So it was right there. So this was the long signal in IBIO. IBIO triggers and fills on this day. And look at what it does in 2 days. 642%. Wish this happened more often, but, you know, it just doesn't right now. And I wish it'd be easier to differentiate between the good and the bad, but it just isn't right now. It will be soon enough. Be patient. All right, going to go and wrap it up here. If you liked the video, please give me a thumbs up. If you didn't, give me a thumbs down. If you haven't subscribed, subscribe, ring the bell. Comments, questions, suggestions, complaints, leave them below. I'll get back to you as soon as possible. Once again, happy Memorial Day weekend, everyone. Aloha.